Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from the CNBC TV18 Prime Ionic Wealth Studios. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. Before we head to our guest, let's take a stock of the action in the global markets. First of all, an overnight indices on the Wall Street snapped a 5-day gaining streak as volatility continues into December's trading month. One of the factors putting downward pressure on the stock market was the Bitcoin, the flagship cryptocurrency that dropped around 6% to trade below $86,000. It was the cryptocurrency's worst day since the month of March in this year. Meanwhile, the markets in Asia largely are trading higher, while back home, the Wall Street trades with losses. It is about the crude oil prices, which seem to be also holding gains after Russia's Black Sea coast port authorities halted all loading operations. OPEC Plus also reaffirms its decision to suspend production increases during the first quarter of next year. And on the money market front, well, it's the Indian rupee, which hits yet another record lows, as you can see on your screens, touching 89.95 against the US dollar. A few paisas now away from that 90 mark. Joining us now is the first guest on the show, Jonathan Barratt, a CIO at ETO Markets. Jonathan, thank you so much for joining in. And first thing really is about the kind of moves that we have seen come in for the precious metal prices. Silver especially, because we've seen nearly 12% of gains in the past 6 or 7 trading sessions itself. A bit of a correction right now, but not too far away from the all-time highs that we saw in the markets yesterday. What is it that you're watching out for now in silver?
Right, Manisha. Look, a terrific move. It's just been going one way for quite some time. Look. I still think the market's still thinking about supply problems there. I think that you've got the tight supply, you've got strong industrial demand, you've got demand from the electronics, and I think it's all coming together. And everyone's saying, well, there's just not a lot of supply. We know where the supply in China. We know that exports are record levels. So I think this whole story is sort of just continues to gain momentum. Plus, we've also heard that a major short has cleared itself out of the market, and that sort of helped force prices. But still, expect a lot of volatility.
Oh, yes, absolutely. How are you looking at the silver prices going forward? And I can't be asking for targets the way the markets are, but what is a range that comes to your mind from these levels?
Yeah. Look, I think you, as any trader, they've got to sort of expand their ranges a little bit. But I'm being guided by about 55 US dollars an ounce on the downside. I think if we break below that, we'll go into a deeper consolidation phase. On the top side, we're seeing consolidation at the higher levels at the moment, although we've had about a 1.5% pullback, but that's nothing with the way silver trades these days. And I do actually think from here, we head up to that $64, $65 an ounce, maybe even higher. But at the moment, I think the stories and the fundamentals are still there.
Jonathan, would you say that to take the prices higher from where we are trading right now, it perhaps is going to be a very strong industrial demand or a very new category of investors that need to perhaps come in?
Oh, look, I think so. I think when we're sort of turning around to new demand scenarios. Now, remember last time we came up here, it was the Hunt brothers, and that was purely speculative, 45 odd years ago. And I think now we're seeing just good stories about growth. And I think if China starts to lift itself out of its economic malaise, and remember, we've had really solid industrial profits coming through from China. This all supports this growth story about the demand for silver. So pretty encouraged by that. And as I suggested, I think it just continues. So as long as China can sort of develop its strength, continue to get profits, continue to move out of its consolidation phase, the economy, then I think that's going to support silver.
How are you also looking at the macros? Because the dollar index has come off its recent highs and the market's almost putting in a 90% probability now of a Fed rate cut. If that does go through, is that already baked into the prices, or you think that could be another reason for the prices to gain?
I think the market's generally said, well, we've got that plus 80% that we're going to get a rate cut. We've had dovish comments that continue to come out. Well, let's view like the Fed. Let's view the data as it comes in. If ADP data comes out, weaker, that'll support more cuts into 2026. And if that's the case, that'll only support the precious metal market. So I think if the economic numbers, the macros, the economic numbers start to remain weak in the US, then that'll fuel greater expectations of rate cuts sooner, and that'll only weaken the dollar and support the precious metal markets.
Oh, well, absolutely. And if the silver prices have gained up by 98% in this year, we've seen around that 62% of gains for gold as well. How are you looking at gold prices from here? Because we've almost forgotten that with the kind of volatile move silver seems to be showing.
Look, I'm encouraged. I mean, we know we love gold, and I'm also encouraged by the fact that it's holding onto these highs. So when we look at the market technically, we can say, well, if the market's sort of hasn't had that push higher and then complete collapse, it's actually holding on. So whilst it's holding at these levels quite nicely, it's consolidating well, and that's giving chance for new investors to say and have a look at the story and say, well, I think things aren't going to change, in the US in terms of interest rates and the US dollar seems to be under a weaker realm, which is something that we're supporting. So I think this pullback just gives investors an opportunity to add to positions and or initiate positions.
$4,200 an ounce is where it really seems to be consolidating right now. So if you had to give a range for gold as well, let's say for the next 6 months or so, what is that going to be?
I think we got to look up through that 43.50 as long as that macro picture stays there. I think it hasn't had that aggressive run like silver has had. So I think it just consolidates. There's nothing really has changed out there to stop a bullish picture. And to me, that's the important thing. Remember, we're still getting a lot of central bank activity, in the sector. So I think people are seeing any pullback as a chance. 43, 4,500 is something that we could look at as long as the current picture stays the same.
Talk to us about copper as well, and that clearly is another thing that seems to be making very, very strong moves right now. We've seen an all-time high on LME. We've seen a 4-month highs on US prices, but the US is then not far away from the all-time highs that we created in this year. So whether it is about supply, demand, macros, almost everything seems to be working for copper.
Absolutely. It's crazy to see it at record highs when we're still discussing how the economy in the US is going. So when you think that the things are slowing down in the US and then you've got copper on a record high, you have to think they're outside the square and say, what is actually driving these prices? It's obviously not the dollar, so it has to be that supply and that pent-up supply issues. Because remember, we've lost about 3% of production already. So there are other little projects out there which are crimping supply, and as a result of that, people are just sort of saying, well, I've got to have some copper. Remember, we've still got that backwardation in the market, and whilst that's there, people are saying the near side is still quite an issue. Further down the track in terms of prices, it consolidates a little bit more. So if anything, this is a shorter term opportunity, and I think it will consolidate a little bit further over time once we get some more supply coming back from more mines starting to come back in and produce.
Jonathan, if you had to pick up a favorite within the metal as a sector, what is that going to be?
Look, you know what? I'm happy to stick with silver. I'm more happy to stick with gold. Copper. I don't mind the whole sector. I haven't changed my mind in terms of jumping ship with profits. I'm quite happy to stick with all of them.
How would you also, how would you also look at the crude prices?
Crude prices, have a drink. Look, I think if anything, I'm sort of quite positive crude, and I have been for quite some time. I do know and understand what I understand that what, the supply issues, anything that happens in the macro side with Russia, that's going to cause some issues. And I'm actually feeling more confident that crude prices will stabilize and go higher. When I particularly look at Brent at around US 62, 63, it's holding very, very well, and we've got very critical support. So whilst it stays at these support levels, and it's interesting what Russia actually has just done in terms of its supply, where it stopped, and I also understand what OPEC has said. So they're all supporting supply constrictions, which will support the price of crude oil. Remember, crude oil is one of the only commodities that hasn't had a very, very strong move. So I think we'll see that oil will start to move up from here.
Thank you so much for joining in. So that is, of course, bullishness continuing in case of gold and silver. Well, as far as copper goes, it's a near-term bullishness, as Jonathan tells us. But with that, we head for a very short break. We come back and talk about cryptos. Welcome back. You're with us on Big C on CNBC TV18 Prime. Joining us now is Vineet Budki. He's partner and CEO at Sigma Capital. Vineet, hi, thank you so much for your time. What is your sense, first of all, with the kind of sell-off that we are continuing to see for crypto, whether about leverage trade or the money absolutely rotating out of here?
Good morning, Manisha. Good to be back again. Actually, interestingly, last time I was on your show was 10th of October in the morning when we were debating whether the markets will ever see that retracement of 60%. I think that evening we had that 30% drop to 102K. So see, my views are the same, which I maintain on those things. Three things have basically happened in the market. One is, which I mentioned that time, that Trump and crypto are not the center of the world. The whole financial world is much bigger. So what has happened in this 2 months? Japanese yen, they're saying that they're going to get interest rates high over there. We are seeing the Fed decision is going on and off. We are seeing someday they're saying 25%, someday they're saying 50%, and sometimes they're saying it's not going to happen. Right now the 25 base point cut is the maximum, and then tariffs. So basically the whole financial world shapes the prices of assets. So point number one, that is a major criteria. The second part is, when we said that expected retracement, and I remember you mentioned that isn't it different this time because institutionals are there. My biggest issue with institutionals is they still don't understand what this asset represents. I've been meeting a lot of managers in New York, and I've been asking them just one clear question. Given that if tomorrow the economy goes bad, out of these three assets, which one will you sell? One is Bitcoin, second is your house, or third is gold. And they always mention Bitcoin as the first because they still don't understand this asset class as such. So, institutionals is still there, but not fully there, which will come in the next 4 or 5 years. Liquidity is missing. When I say, we saw on 10th October, suddenly there was a tweet and Bitcoin crashed to 102. A lot of tokens vanished. They were nearly zero and then they came back. So basically, institutionals have figured out there's a structural issue in this market. It's normally this what happened on 10th October was more of a bank run. Suddenly everyone runs to the bank to cash out money, and the banks couldn't handle it up. So I think that is the second thing that played. And the third most important thing which we mentioned was immature markets. In 1980s, people used to buy and sell on rumors. They didn't understand what Reliance is doing. Someone would say, buy this stock and buy that stock. Today, crypto runs on 5 key FUDs, as you saw, immature rumors that float. One is, that USDT will fail. People don't understand if USDT fails, which is the reserve currency of crypto, there is no crypto. That Bitcoin is $5,000 next day. People don't understand that, they talk about quantum compute. My whole question to these guys who talk on Twitter about quantum compute is the guy who made Bitcoin for the last 15 years with all the resources in the world has not been found. Do you think he doesn't have, whether it's a person, whether it's an organization, don't have solutions to compute? Third is, Binance can go left, right. Today, Binance is an institution. Binance is 5 times bigger than the second player. So, when you talk about these parts, the China FUD, every day China bans crypto, every 3 days they come back with it. And finally, this new FUD that has been happening, which you have seen the recent crashes, and Peter Schiff yesterday mentioned that as well, is MicroStrategy.
Right.
Understand that, Michael Saylor comes from a background of doing startups. He has failed once, and I really respect failed founders because they know their mistakes. Please understand, this guy sold his shares yesterday to give 2 years of dividends, has 4 years of runway because his loans don't expire in 4 years. How do people comment that, someone like that, he has $55 billion of BTC and just has taken 1.2 billion to have a peaceful world. So this all is shaping how Bitcoin prices, people are liquidating Bitcoin prices, which is pretty wrong. People still don't understand the utility.
So Vineet, So Vineet, are you saying that you're not calling it a crash? Are you calling it a profit taking? Are you calling it cyclical in that sense?
I'm calling it a retracement where some, 800,000 BTC has been sold by old holders, and retail is panic selling. Institutions or ETFs, whatever you call them, are panic selling up. So I don't think it's a crash. For me, crash is a 60-70% crash, probably Q3 next year when, the black swans come in. What are the black swans that are forming? is the midterm election, first of all. We saw that US, the government couldn't open up for 60 days. Winning midterm is going to be critical.
Yeah.
So I still don't think this is the crash yet.
But you, Vineet, you rightly pointed out that much of the run-up that we've seen in crypto in this year perhaps has come in on the back of US, Musk pushing it, or in some sense the US president pushing it as well. The first half at least belonged to that. The second half, of course, has been a lot of other factors as well. So if the US starts to weaken in some sense, are we looking at, because we're not looking at US just as a sentiment, they were changing a lot of things structurally, or hoped to.
So, see, I think if the US falls back, definitely there is a winter that is coming because they have been pushing things up quite a lot. But let's be fair, when we talk about on your other shows, when you talk about stock performance, you don't talk about governments backing them up. You talk about real revenue backing these companies up. So tomorrow, when this comes up, adoption would come up. Ethereums of the world will have smart contracts and WorldCoins of the world will get identity. Aves will become bank. At that time, revenue will coin. So I think driver of this market has to be real adoption, and adoption means people understanding what these digital assets do rather than just buying because they will go up in price. But definitely a retracement will come because US has been pushing it up quite a lot. Where does the new money come in? In fact, in your show, just 10 minutes, you asked the gentleman on commodity that where will the new money come in from? And that is a very critical problem we in digital assets have to understand. A very bad example, but unfortunately that's all I have, is Indian stock markets were shown by Harshad Mehta that you need liquidity in there. He routed money wrongly. It's a wrong way of getting it, but he actually got capital into the markets. We in crypto have to figure out how do we get that money either from the family offices, either from institutions, and then build this industry because liquidity is still very thin in this market.
How are you then looking at 2026 going forward? Because 2025 has been about volatility, a lot of support, and then, of course, the kind of leverage liquidation that we are looking at right now. What is it that 2026 will bring in when it comes to crypto or Web3 or tokenization for that matter?
For me, 2026 is the time when people actually build up. The noise would have gone, when BTC grows to 60, 70, 80K, the guys who are here for quick money vanish out. This is the money to buy. I've been actually, friends and family, I've been messaging them. Bitcoin's at 80K. Cost of mining Bitcoin is 60 to 80K for the big guys. This is the time to buy. This is an asymmetric bet. When the markets go down, you really need to get in. Markets adoption is coming, real world asset tokenization, whether it's stable coins, whether it's real estate is coming, gaming is becoming big. I would say this is the time where, you will have less noise and more real building. And I advise, technically I shouldn't financial advice, but I would tell people, please understand utility and get in these markets. These are amazing prices to be going into the market.
Vineet, interestingly, we haven't really discussed this a lot on the cost of production or the mining cost at all. Are you saying that the Bitcoin mining cost currently stands at 60K?
So just a bit of a background. Before running the venture fund, I basically sold 200 megawatts in the region. So basically anyone in the Middle East, mining has been sold by me. See, please understand, mining cost of mining Bitcoin depends on 3-4 critical parameters. One is the cost of building that, getting that miner, and second is the electricity cost. Today, US and whole of Europe and the key places run at 6.5 cents per kilowatt hour. At that price, if you look at reports, for the big guys, it's between 60 to 80K thousand dollars to mine one Bitcoin at the latest hardware. So today when BTC is at 80, what we have seen, Standard Chartered had a report 4 years back and it has a report now as well. Bitcoin does not go below cost of mining for a long time. It can go to 50, but it will be a week and it will come back up. It cannot stay there below 50 for 2 years because then all the miners will shut off. So as of today, it stands at 60 to 80K post difficulty. It will increase further up. And this is what also drives Bitcoin during halving. What happens is when your Bitcoin rewards go down, miners pull out liquidity from the markets. And that is where supply reduces and demand goes up and Bitcoin goes up ballistically. That's why we have the 4-year cycles. So yes, it is 60 to 80K. Can we see a week below 60? Yes. I would DCA into the markets because it's a perfect buy. Downside is 60, upside is whatever. You believe in a million or you believe in a 200K BTC.
Vineet, would you also have numbers? This is interesting. Would you also have numbers on what is it about mining costs for Ethereum, which is much lower, by the way? Are we saying that the cost of gas, cost of fees and percent is much lower?
So I don't mine Ethereum. I've been mostly into Bitcoin mining, and people can go to a website known as ASIC Miner Value, where they can put up the hardware and put up the electricity cost. And that's where you can figure out what is the cost of mining each. And there are enough websites which will tell you what it would cost. As of now, it stands at 60. I don't do Ethereum much, so I would not be in the right place. But my advice to people, if they're looking at cash flow, mining is a play. But if they're looking more at asset building, that means they want to buy these assets up. These are the low prices. Get into some of these assets now.
All right, that's the same advice to get. Vineet, Budki, thank you so much for joining in and making sense of lots that's happening within the crypto space there. 2026, as you said, is going to be quite an interesting year. And as you said, there are various segments which have started to use crypto, Web3 and tokenization in a very strong way. And that adoption perhaps would take us to new form and shape on where crypto heads going forward from there. But with that, that's all the time that we have on Big C. Thank you for watching.